Without further ado, I will actually start by asking all of our panelists the following questions. What do you see about the implications of Pemex financials, the source of, in this case, the funds of revenue, but also financing in terms of the operations, and how this will play out with all the suppliers, contractors, and I would say everybody down the contracting supply chain. Um, I would like to start with Ixchel, if you can give us a brief overview of what you see on this matter.
Thanks, Gonzalo. I think I'm ready. I also need the camera on for starting with the answer. But again, thank you very much for inviting me to the forum. Also, big congratulations to the organizers for putting all together in this challenging environment and having to do everything virtual. I think it's actually going really quite well. I think, let me see. There you go. Perfect. Then we can go ahead and start. So I think the important point I would like to make here, and also that goes in line with my perspective, is that this is a challenge that it's not unique to Mexico. It's harsher in Mexico for the reasons that we will explore today, but projects overall worldwide and the financing for those projects are at risk, especially in this year, right? We've seen projects being either deferred, deflated, downsized around the world. I think we're seeing an increased caution around investments and a less availability for financing of those. I think that the financial health of the sector is deteriorating, and we've seen that in general with the filing of bankruptcies around the world, M&As that are just starting in the sector and that we'll continue to see in the next few months. And the other point that I think it's important is that the companies are adapting their strategies for a low carbon future. All of this to say that the financial institutions are, I mean, I wouldn't necessarily say phasing out of oil and gas, but they are reducing the exposure of their portfolios to oil and gas products around the world. They're raising the bar that the projects and that the companies need to prove to receive the support from the financial institutions. So I think the question coming back to Mexico is, how is Pemex prioritizing this project and securing that the capex that it's going to be available, it's going to be destined to the highest profitability and lower risks projects in both upstream and downstream, right? I think there's going to be a lot of ongoing efforts in terms of the transparency that all the different sectors, all the different participants in the sector are going to have to provide, but also an increased accountability from the market on how those decisions are going to be made, right? I think that the key here is, how do you prioritize and how do you make sure that the project that you're participating passes this stress test that will gradually have to comply with higher standards worldwide. And on that point, I think Mexico and Pemex in particular have probably a little bit more to catch up to what we're seeing in the national trends in terms of like providing clarity for this prioritization of the projects.
I would agree with you on all fronts. I would like to ask Victor about this, especially given and unfortunately, the unsurprising news that Pemex has been delaying payments to its contractors. How, in your case, in Perforadora Latina, are seeing or are feeling the impact of such delays?
Well, thank you very much to everybody. Good afternoon to the audience. I think that is a quite interesting question in the sense that today we need to understand more than ever our client. And if we understand, as Ixchel has mentioned, that the second quarter worldwide, it was a dramatic quarter for the industry in terms of demand. And secondly, in terms of the price per barrel, where nearly rose the zero, then we need just to understand that that creates a hole in some respect in cash flow. So today, more than ever, we need just to understand our type of projects. We need to understand if those are strategic for our client or those are more tactic. And based on that, we need just to improve our communication with our client, try to find out the solutions, because everybody has said that today we are suffering a temporary crisis, in the sense that the supply and the demand has been affected. So if we all believe that this is temporary, we need just to keep looking at the mid and long term and find out the best way just to sort out this particular period. And most important is we need to have communication and communication and communication with everybody in the supply chain, and just understand how flexible we can be in terms of managing some cash flow shortages. So that's, from my point of view, the most important exercise that we need to do. And this requires a lot of effort, time consuming, because we believe that communication will help us just to get to the mid and long term. Because if we still believe, and that has been recently confirmed by Pemex, that they still need 2 million barrels for next year, then we need just to work together, be an ally with Pemex in this case, just to get to that point, and that should be a success for everybody.
Great view on that, Victor. I would like to take it to David Enríquez. David, for example, what are the chances of getting a secondary response of financing if Pemex is, I would say, is having some shortages, especially of cash flow, especially that we saw on the second and third quarter of this year?
Thank you. Thanks very much, Gonzalo, and thank you very much to my fellow panelists and, of course, the organizers in these challenging times by all means. Well, it's been really a difficulty. Your question is quite pertinent. We have on the first place those contractors that are working for a more diversified market, not only for Pemex, and those who are really in such a problematic situation, which Pemex is their, let's say, their only client. And the problem is that not only in terms of the difficulties that they were already having, with respect to having their receivables as means of guarantee, as collaterals, but also in the likelihood of having factoring, those receivable systems, as it happened just a few years ago. They are seeing all those, let's say, doors already shut. So they're really having a difficulty. We are seeing, sometimes even shareholders, in the need to increase their equity in order to have, the operation of the company running. We are starting to see, for the last semester, I would say, much more of distress asset type of exercises. However, of course, distress financing is by nature not the best for any company. The type of analysis that you see there, and of course, the level of tariff, the rates, and so on, the interest that you will be paying, and the let's say muscle flexing type of exercise that you will have from certain type of funds, of distress funds worldwide, are absolutely different as compared to, let's say, normal situations to financing in a normal situation. So I would say that distress financing on the one hand, and having more equity from the shareholders is really, what we are seeing nowadays when you do not have, any normal sort of credit exercise as in a business as usual type of environment.
Great, and I agree completely with you comparing that. Actually, now with all the I would say tight finances, especially in the whole industry. We saw the negative prices in May, so everybody was shocked to a core. I would like to take it now with Marco. Marco, Ixchel actually mentioned, and something that was actually picked up by David, about the mergers and acquisitions, that everybody is trying to get more out of thin air, I would say, of a very tight environment. What are your views on the market? Is going to have more flexibility? Do you see more avenues for opportunity for contractors, especially in a very tight market?
Thanks so much, Gonzalo, and good afternoon. Firstly, thanks for Business Review for inviting me to this panel and the panelists with us. Firstly, with regards to sourcing of financing, Gonzalo, in order to obtain the best financial conditions, developers and services providers have a huge range nowadays of national development banks, private banks, and as already mentioned, David, we have equity and capital funds, and they can obtain the best form to finance their projects by project finance is one alternative. The other one is the M&A, because we'll see more flexibility in the markets. And in this moment, will be very, very important to take this figure of M&A to solve some financial problems of some groups. And the other one is the directly investment of private investors or equity funds. Maybe with regard to upstream projects, the oil companies must look for innovative alternatives that release pressure from their finance balance by taking advantage of their own hydrocarbons production or the economic interests of the contracts and monetizing their future production. Such benefits have been achieved by different oil and gas companies in some countries like United States or England, and by the figure of financing scheme known as reserve-based finance. Maybe this is new for Mexico, but finally, it would be a good option. The essence of such scheme is based in granting a credit facility guaranteed by the oil reserves. This is impossible in Mexico, but by the economic interest of the E&P contracts. On the other hand, the amount of the credit would be defined based on the valuation that the creditors have made of the oil reserves or the economic.
Marco, creo que estás en mute. Se acaba de poner en mute.
Sorry. Sorry, Gonzalo. Due to the regulatory characteristics of the Mexican legal hydrocarbons framework, it's not possible to constitute securities over the hydrocarbon reserves. Yeah, our constitution is very clear. But there is the option to constitute a non-possessory pledge over the exploration and extraction contracts, the E&P contracts. In other producing oil countries like Brazil, they starting this figure, and we can looking for this kind of or type of financement with the Hydrocarbon National Commission in order to looking for a new regulation to be flexible and to provide financing support to its oil sector.
No, those would be actually great avenues for additional investment and financing here in Mexico for all ventures, either be contractors or operators. Let me take it back to another question, and I will combine it, because one of the things that have been mentioned, especially from David, Marco and especially Ixchel has been that this is going to be a lot of M&A, merger and acquisition. And such, there is going to be and has already started some activity in the secondary market. Ixchel, in your view, is this going to be something that we're going to see more traction going on, or is going to be more of a sluggish, in this case, buyer market of opportunities in Mexico?
I can give you my perspective from more of a global trend, but I think we unfortunately we haven't seen the worst of the crisis in the sector to hit just yet, right? I think part of the problem is that we're continuing to face delays on the demand recovery of oil worldwide, which is going to increase the pressure. It's going to increase it's going to increase the pressure in general to the companies in the sector, and therefore will lead to more M&As in the operation. I think from the perspective of the oil price, I think an unintended consequence from a lot of these M&As that yes will provide more flexibility in the short term, will probably lead as well to these companies to allocate less resources after the merger, right? To try to find those economies of scale in the operations, which are precisely the reasons why they're pursuing this strategy, but will probably bring flatter growth in the oil production globally. Right, so I think the one of the unintended consequences is one that you'll have less budget for growth from some of these companies. And let me give you an example in the U.S. For instance, the mergers that have been announced so far in the past few weeks and months cover around 1/5 of the oil production in the U.S. at the moment. Right, what's going to happen with that? Does that mean that 2019 then becomes a peak for U.S. production from that perspective? And I think the other point is that it increases the risk and the vulnerability of the system as a whole for future oil production. Right.
I agree with you, Victor. On that regard, let me take it now with what you are seeing, especially on the service companies. With Pemex, and especially Pemex, in a very, I would say, weak position, how are your options to bring more revenue other than to diversify clients?
Well, historically, Gonzalo, I would say that Pemex has been regional wise talking. Pemex has been our unique direct or indirect client for so many years. Today, once there were some changes to the regulations, there are some other players, but they are still in the initial phase, I would say. So based on that, Pemex today is still our source of revenue in some respect. And while I agree with Ixchel about these M&As happening worldwide, we need to remember that Pemex has been driven by not only economic factors, the traditional economic factors, but also by some state interest. And those state interests today are trying to give some more sovereignty to the oil and gas. And that's, in principle, tends to strengthen Pemex in the sense of trying to make this company the driver or the company that will lead some aspects of the economy. Pemex recently issued their third quarter results. Those are starting just to improve a little bit. And certainly there is a need of cash just to try to meet all those goals. And based on that, this is where I still believe that Pemex cannot be seen separate from the state. And based on that, there will be some opportunities in the future. And then the M&As will happen in Mexico, certainly, but in a lesser scale than it could happen worldwide. Because while a lot of operators may start seeing that the low recovery may delay some investments, Pemex is still having this goal of having 2 million barrels per day for next year.
All right. Let me take it with David. Uh, David, one of the things that, for example, a number of people has been mentioned, especially on the comments on the chat, is about the relationship that Pemex it will have, and I would say the overall impact of Pemex declining position. We're seeing, and now that Victor was mentioning it, that the third quarter results have already been announced. For the year, we have already a 25 billion loss. So what if Pemex continue its decline rate? What is going to be, on your view, the impact on the overall supply chain?
Well, that's of course a very good question, and of course the environment is a bit gloomy. If you put not only as Ixchel was commenting, let's say at a global scale, we have to take into account that the level of shock, according to the International Energy Agency in its 2020 outlook, the drop in investment worldwide was 18%. So it's really dramatic. So if you take that into Mexico, that level is of course substantially higher, not only by Pemex but also by other players. But to answer your question, if we continue the same trend, I mean, I don't see other. I might be not very politically correct, but I do not see, if we continue the same trend, I do not see other alternative rather than a mere implosion of Pemex. I mean, it's just a matter of time, I'm afraid. So if if Pemex and the federal government do not see the level of severity that we are experiencing and how it is affecting the chain altogether, we are starting to see in the market, not only from Pemex contractors but also by subcontractors, a level of litigation and arbitration, an increasing level of litigation and arbitration, and I think we are simply seeing the first the peak of it. We are the number of animosity in the litigation and arbitration that we will start seeing in the next months is really immense. I think contractors and subcontractors are starting to assess what are the options in the context of the level of shock that they are seeing in not only globally but in Mexico, and now they are really seeing which are their probabilities in terms of going into litigation or arbitration nationally or internationally. So as Ixchel was correctly commenting, this is just really the beginning, not only in terms of the good aspect of all this would be probably M&A, but M&A will not be there as all my fellow panelists were commenting. You have M&A whenever you have the conditions for M&A, and the problem now is that we have a negative environment globally, so it cannot be an M&A activity in a business as usual environment, because it is not a business as usual environment whatsoever. So I'm afraid we will not have the M&A as we could have, and the problem, especially for those contractors and subcontractors working primarily or only for Pemex, is that we are getting close of options. So we might see not only insolvency issues not in a very long term, but in a rather short or medium term, and of course litigation and arbitration going on, sadly.
No, I agree with you, and then again, I think that actually your comments set the table for the question that I would like to ask Marco regarding about. And I agree. If M&A is not going to be as a salvation boat for a sinking ship, rather is going to be also the possibility that now that equity money is being funneled to the activities, how much of a demand destruction is going to be right there? How many of I would say existing business are going to survive, and rather who is not going to make it out of this?
Thanks. Gonzalo, first of all, as mentioned, David, Pemex is facing struggles on numerous fronts due to several financial and operative difficulties. During the second quarter, as you know, of this year, the total sales decreased by 51% compared to the second quarter of 2019 as a result of shortfall domestic sales and the decrease of the oil crude exports. So all of these activities impact directly to the suppliers and service providers of Pemex. But finally, in my opinion, how will Pemex's service providers survive this crisis? As a result of these policies, suppliers should be open to different alternatives to face this problem and solve and face this financial downturn. Firstly, a good option may be taking out short-term loans to cover their financing commitments. Secondly, companies must review their contracts to see if they can resort to alternative dispute resolution mechanism. As David says, maybe the arbitration is one way. And finally, if Pemex fails to pay its service providers, they must bring the cases to courts or arbitration procedures, depending on the applying dispute mechanism agreed in the contracts. So the huge or the bigger service providers maybe can take actions over the slower service provider.
No, I think that is a very fair point on that, Marco. Well, we're almost about on time, and I would like to take a little minute just to ask a little brief on your ideas of how Pemex can actually can increase its activity rather than production. The production we know that is going to be facing a lot of uncertainty, geological, operational. Rather, it's going to have Pemex pushing forward in a weaker environment, in a shrinking market. Ixchel, do you see it something that is going to continue, or are they going to rethink the overall strategy?
I come back to my first comments in the sense the importance to prioritize, the importance to understand that. I mean, a lot of what we said today is about the challenges in the market, but I think the opportunities that Mexico represents on a global perspective, from having reserves, having the potentials, but also having a market that's growing and a service sector that can support that growth, it's very unique in terms of the conditions that we're seeing in the rest of the world. So learn your strengths instead of try to overachieve and underdeliver. And I think the other point that I would say is we've discussed about the benefits of M&A in the current environment. The way I would characterize it, just to summarize, is it's an M&A in a market that has already shrank by more than 10%. And I'm making this assessment in terms of like the global oil demand. And it's a market it's an M&A in a market that is going to remain smaller than we were used to for at least the next 3 or 4 or 5 years, and that we're not expecting a sustained growth until post 2025. So is M&A an option? Yes, but just from a smaller pie for now, right?
Correct. David, I would like to take it the very same question. Do you see Pemex pushing through in a weakened environment?
Well, it should. However, we are, and again, sorry if I'm politically incorrect, but the level of dysfunctionality that we are accustomed to see from Pemex from a few years now, that has been increasing. And it only reflects the position of the government itself. I mean, until we see really an independent company, probably in a certain point in time, really flowing into the international markets, in capital markets and so on. If we continue to see Pemex sort of trapped in the in ideologies and so on, and if it does not, if it is not led to behave as any other operator with a level of flexibility and so on, that you can see, its peers, the likelihood of Pemex being overcoming this crisis is probably less and less, and I think the window is getting closer and closer, and it will eventually be shut, and it will explode because of the desperate need of cash, and the problems that it's facing, from all perspective, financial, operational, and so on and so forth. And it will be a pity because it's of course a great company in many senses with great talent. So it will be a pity not to understand that the level of the immense problem that it is facing, because if in a global scale we are facing a dramatic problem, I think it will be many times more for Pemex to overcome the situation. So it's really a moment in time in which the government has to acknowledge the need to free Pemex in many senses.
I would agree with you completely. Marco, on that regard, especially, and take it from David's point, do you see, for example, that the government's commitment to pretty much, and I would say, put Pemex in charge, and at the same time, this I would say monopolistic view is actually constraining Pemex? Do you see that opportunities and therefore activity will arise, or are we going to continue to see this, I would say, this stagnation in activity?
Thanks, Gonzalo. I think that the problem is that by the law, Pemex has two limits. The firstly is that Pemex has an annual budget limit, and on the other hand, the limit of its debt. So, in my personal view, Pemex needs partnerships to be strengthened. I believe that the currently public policy upheld by the federal government maybe so far than push Pemex to be more competitive, maybe can generate the other effect. In my opinion, strengthening Pemex requires developing a robust portfolio of projects, as well as considerable contributions. Partnerships could be a factor to facilitate this process. Pemex would effectively diversify its portfolio by participating in different kinds of projects with different type of business partnerships. Maybe this strategy would be the better alternative in order to obtain access to the state-of-the-art technology and to achieve a better financial position. Ultimately, this strategy would be aligned with the currently public policy upheld by the federal government that maintain the role of Pemex as the strategic entity that develops and fosters the oil and gas industry in Mexico. But it's very important, in my personal view, that Pemex needs to have partners, because the budget and the debt have a limit to this own state company. And to end, it's important, Gonzalo, to say that nowadays the federal government budget deeply relies in the Pemex resources. The last time that I reviewed the information, 10.4% of the federal budget every year is supported by Pemex. So I believe that if we want a better Pemex, we need to give mechanisms and tools to be flexible and to have other support, finance supports by partnerships. I believe that in the medium term, independent of the ideology and the policy of the federal government, the Farmouts would be one of the most strong and power tools that Pemex would have.
I agree with you, Marco. Farmouts actually think that it's going to be, and it is already, a great way for Pemex to raise some cash. I mean, given the way that we were having those in the earlier years, actually, we saw that Pemex was receiving around $3 billion for its efforts, either in Trion, also in Ogarrio. So in reality, it would be a great mechanism to strengthening Pemex to give it more opportunity to pursue more opportunities. But given that that is not the way, at least not in this administration, I would like to ask Victor, if for example, in the relationship with Pemex, how much of leeway, of flexibility would service companies would have to reduce its rates? We know for a fact that Pemex has already requested some discounts on their existing contracts, but how much of that service companies could actually can afford it?
It's a very good question, and I think we need just to remember that we are already, as an industry, coming from the crisis in 2014, changing the way we behave. Why? Because today we cannot operate any longer with $100 per barrel as it used to be in the past. Today, the reality and the first signal of change, I would say, was 2014, which made the whole industry to adapt to new circumstances. Certainly, and I will take from Ixchel the comment that we need to prioritize, identify our strengths, and be much more focused. Otherwise, we diversify too much, we will lose focus on what we need to do. So based on that, we need, as an industry today, to continue with that efficiency. And answering your question specifically, today there is an opportunity to be much more focused, identify our strengths, and try to provide solutions at better rates, because that will help us as a company, as an industry, to develop further our strengths, and secondly, provide solutions to our client.
That is a great way to see it, Victor. With that, I would like to take it to a brief Q&A with the audience. Fernando Cruz was asking, assets valuation is and will keep coming as a big issue given the market conditions. I agree. How do you think this is going to challenge ability to access financial resources? I don't know if any of you wanted to comment on this. Feel free to intervene.
I can comment on that one. Certainly, today, the assets in the new environment are changing, those valuations. We will see, in my opinion, a changes in the next months, probably years, because we need to understand better what is going to be the new normality. And the new normality, probably one is for the next 3 years, and the new one is after 2025. Let me put it like that. So it depends on what type of assets we are talking about. And the most important is, what is the market in front of us? And as Ixchel has mentioned, Mexico has a lot of opportunities. And if there are contracts market in the sense that we can put those assets into work for the next 2, 3, 4 years, as companies like Petrobras has done, try to get assets, try to get contracts, specifically when when the market is providing assets at lower price, then there will be opportunities to finance those projects. So I think project finance will be very relevant in the next 12 to 24 months.
I see. On that very same, and taking a little of leeway here, Ixchel, one question that I would have for you is that, for example, given this environment, given the down, I would say the downward trend overall in the industry, do you see, especially in Mexico, being more write-offs of existing assets, especially high-cost assets?
It's a very interesting question, Gonzalo. Unfortunately, I'm not the right person to answer that, as my focus is it's more on the downstream and the market side. So I'm happy to yield the question if any one of my colleagues would like to take it.
Actually, I was thinking, Ixchel, especially on the downstream business for Pemex, if there going to be more of an exit strategy for, I would say, money draining business lines like especially downstream.
I can answer you what a market driven decision should be. And the answer to that would be yes. And again, comparing the example that we had, for instance, in Petrobras, and how a way to strengthen the position of the NOCs precisely by selling not only least efficient refineries, but also part of the distribution and retail segments in the country. I think, unfortunately, I don't think that's necessarily part of what the government wants to achieve now. And it's the trend that we're seeing, it's actually more of a strategy of try to cover the entire market and become the sole supplier of absolutely everything that we required. Which it has its positive side from the energy security perspective, but I think it runs the risk of putting not only Pemex, but also the consumers in an environment where they'll be consuming more expensive products that will not necessarily comply with environmental regulation worldwide, to put an example.
Perfect. Well, without further ado, I would like to thank all of our panelists, Ixchel, Victor, Manuel, David, for a great conversation. I think that everybody had a great understanding on the different side of the business and how this new normality is affecting everybody, especially Pemex. And given that in Mexico, I would say is the center. I would say is the center of the business of the oil and gas industry in Mexico. That everything is going to revolve about it. So thank you very much for joining us, and we will continue this conversation later on. Thank you.